Today, we're dissecting the anatomy of a Bitcoin liquidation cascade. We're going to break down how billions in leveraged bets can trigger some truly violent yet predictable price swings. $1.82 trillion. That's Bitcoin's total market cap. But honestly, that number is just a smokescreen for what's really happening under the hood. See, beneath that surface, you've got billions, literally billions of dollars in leveraged positions just building up. They create these pressure cookers, these zones where a violent price swing isn't just a possibility, it's practically guaranteed. So how does that pressure lead to this? A gut-wrenching 8% crash, only to be followed by a massive 10% rally, all inside of 48 hours. It looks like pure chaos, right? But it's not. The answer, the entire story, is basically written right here in this liquidation heat map. We're going to break it all down. And hey, if you find this kind of analysis valuable, do me a favor and drop a like and share.
All right, let's get into it. First up, the calm before the storm. Because every big violent move, it always starts quietly.
So on the surface, late November, Bitcoin's price is just chopping sideways. Kind of boring, right? But look closer at the chart. See those bright yellow and green bands? That's not boring at all. That's billions of dollars in leveraged bets, pure liquidity, coiling up like a spring, just waiting to be released. And all that built-up energy, it creates a trap. The market isn't random. It actively hunts for these pockets of liquidity to kick off a cascade. And here it is, the before picture. Look at that massive bright yellow band just below the $90,000 mark. That is a huge cluster of leveraged long positions. To the big players, that's not just data on a screen, that's a target. It's a giant stack of sell orders just begging to be triggered. Make sure you're subscribed to the YouTube channel so you don't miss these updates. And that, my friends, brings us to the main event. The hunt for those longs is officially on. This is just a perfect illustration of how it works. On the left, you see the setup, that target we just pointed out, and on the right, the trigger. The price makes this sharp, almost surgical dive right down to that exact level. It pierces right through that $90,000 zone and smashes into that liquidity pool. Now look at the chart. See that blank space where those bright yellow bands were? Gone, vaporized, because hitting that first level of liquidations forces this chain reaction of automated selling. That selling pushes the price down even further, which then triggers the next band of liquidations, and the one after that. You get the picture. This right here is a liquidation cascade in real time. It's a really simple but incredibly powerful formula. High leverage, that creates a price magnet. And that magnet, it creates extreme volatility. This isn't some weird glitch in the system. It's a core feature of how this market works. We post charts like this all the time, so follow us on Twitter for more updates. But here's the thing. This hunt, it's a two-way street. After that cascade completely clears out the longs, the exact same setup starts to build in the other direction. Right, so as the price hits the bottom, you get all these panicked traders betting it'll keep dropping, the shorts. They start piling on the leverage. And what happens? A brand new, dense band of liquidity forms. But check it out, this time it's above the price. The trap is reset. And the result is just as mechanical, just as predictable as the crash. The price doesn't just drift back up, no way. It rockets upward in what's called a short squeeze, targeting that new liquidity. It moves with incredible force to trigger forced buying from all those shorts, clearing them out and completing the full cycle. It's just amazing to watch when you know what you're looking for. By the way, if you're getting value from this, drop a like and share. So let's just run through that whole sequence one more time. It starts calm, right? Late November, liquidity is building up. Then, November 30th, the long liquidation cascade kicks off. The market bottoms out on December 1st, and that's when the shorts build up their leverage. And finally, December 2nd, the short squeeze reversal comes in and completes this insane 48-hour cycle. All right, so what's the big picture here? What should you take away from this? First, leverage positions create these predictable zones of action. Second, price acts like a magnet drawn to wherever the most liquidity is. Third, these cascades, they aren't rare. They are a fundamental part of the market structure. And fourth, and this is crucial, the hunt goes both ways, up and down. You got to understand this dynamic. And if you want to keep up with these dynamics, subscribe to the YouTube channel. So that leaves us with one final question for you. Now that you can literally see these liquidity zones, how does it change the way you look at market volatility? Do you still see chaos, or do you see the mechanics underneath it all? Let me know what you think in the comments. Subscribe and drop a like below. Follow us on Twitter for more updates, and we'll see you in the next one.